Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the show where we interview the nation's leading real estate entrepreneurs. It's your host back at it again, Stephen Schmidt. And if you're joining us for the second, third, or 100th time, welcome back. We know you're going to get a ton of value as you usually do. And if you're finding us for the first time, where in the world have you been at? This is about to get added to your regularly listened to podcast docket. I got to come up with a smoother way of saying that. I've been saying that the last few shows, and I really got to figure that out at this point. Anyways, I got a really big treat for you guys today. I got Tyler Vinson in the house, and Tyler is an absolute titan in the real estate space with a long career in the acquisitions portion, who also now is really deep into the I'm going to let him explain it, but it's RE tokens. Essentially what he does is he helps people raise capital, unlock their liquidity, and actually boost the efficiency and the automation of their investing. And we're going to get into how he does that with RE tokens. But before we get started, just remember, at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses in order to build the businesses they've always wanted so they can live the lives they've always dreamed of. That being said, Tyler, welcome to the show.
Hey, thanks for having me, Stephen. Looking forward to it.
You bet, man. So let's just go ahead and give these fine folks a little bit of your background and how you got started in the real estate space, and then when did you pivot and start getting involved with RE tokens? How did that opportunity come about? How did you see the gap in the market, and what are you really focused on now? How did you get to where you're at today?
Yeah, so I've been investing in real estate for just about 25 years now. Started out buying smaller multifamily properties, duplexes. In fact, had a buddy of mine who had come home from college at UW, and he said, "Hey, a couple of my friends are buying apartment buildings," and I thought, "Well, that sounds really cool." And so I made the leap he took me to some investment seminars, if you will. And back then there was, I'm going to date myself, there was Russ Whitney, Carlton Sheets, Robert Allen. That was about it. And the particular one that we went to actually was not a very good one, although I go to real estate conferences and events every year, some fantastic ones. But this particular one wasn't very good. And we got through it. And on the other side, he said, "Let's just go buy some real estate." And so we did. And we went out and we immediately bought a couple of duplexes. And that's really when I fell in love with the sport of real estate investment. So I later quit my job and just did investment full time. And what that meant for me was getting a real estate license. So I worked with a larger brokerage firm in Spokane Valley, Washington for quite a while. And I specialized in investment real estate. And so I would work with real estate investors, helping them acquire mostly single family homes at that point in time. And when the Great Recession hit, I decided to leave that larger brokerage and
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I couldn't think of better timing to start my own, right? At least I didn't have the split anymore. So anyway, I started my own brokerage with my sister, really out of a side room of my house, and grew that. At the time, the markets were suffering quite a bit, so I needed to come up with a strategy of how I was going to, be able to make a good amount of money when there was no buying, selling, or lending really going on in the marketplace. And that's where I came up with the acquisition strategy that I used for a lot of years, where I was basically my own client. I had a lot of people that knew me, liked me, and trusted me, a network I had built up. And so I would go out, and at this time I was really training on seller financing. So I would go out and negotiate deals with seller financing and work with private investors for the down payment, for my acquisition fee or commission, for the rehab expenses, and for reserves. Mostly a hold guy. So that's how I started, and started in smaller multifamily and single families. And then I just over the years worked my way up, started to get into apartment buildings. And today I own Class A storage facilities, larger apartment buildings, some retail, office building, those types of things. And that led me into the syndication world, which is a larger level of capital raising. In my early days, I mostly did either private debt notes with investors or joint ventures where I brought them in as equity partners, kind of including hybrids there. And later, once you start raising millions of dollars, you typically need to get out of your normal network. And so I started learning about like Regulation D and other ways to raise capital for that. So that's kind of my real estate history. When I pivoted is a few years back. There's kind of two short stories I'll tell. The one of the real short stories was the fact that I would have millions of dollars of equity locked up in real estate, but it was really illiquid. And so unless I sold the asset in whole or went and worked with the bank for a cash out refi, which is a pretty painful process, as a lot of us know, I really couldn't access the equity. So, as I grew my business and grew staff, and then I live off of my real estate investments. And so I need to be able to access that equity. We as professional real estate investors know that our equity is normally trapped and locked up there. So that was a problem I really had been thinking about solving a lot. I mean, yes, I would use private investors and do private debt and pull some equity out, but I wanted to play in a bigger way. The other side of that is a few years back, I was coaching my daughter's soccer team and coming off the field, and a good friend of mine from high school came up and, oh, hey, Tyler, how you doing? Lots of hugs. She's like, it's been so great to see your success in real estate. And me and my husband, we've been working really hard and we've been saving up some money, and, we would love to invest with you. And we kind of just looked at each other, and then she answered herself and just said, but we don't have enough money, do we? And that just broke my heart. That was just wrong. And she was right. At the time, I was doing deals where it was a $50,000 minimum. And most of my deals, you actually had to be accredited as well. But I certainly had a $50,000 minimum. And I know she wasn't accredited, and I'm pretty confident she didn't have the 50,000 to do that. And so there was the other side of the problem. And that's where it really came together for tokenization for me. Because when we tokenize real estate, all we're really doing is adding a digital ownership component.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And what that allows us to do is take those fractions of it. You can call them LLC membership units, you can call them shares. When they're digital, we call them tokens. But that allows you to much more easily buy, sell, and trade and move these assets around. And it also has opened up the door to a secondary marketplace where we can actually sell those units to non-accredited investors in a secondary marketplace. All of that takes a lot of compliance, but it really showed me how we could solve the three major problems. One, make it easier to capital raise and get fresh eyeballs looking at these deals outside of our normal networks and really make it a global affair if we wanted to, because this is about scaling your brand at the end of the day. The second one was unlocking that equity so you can tap into the equity without having to sell the asset in whole or without having to wrestle through a cash out refi. And then there's so much legwork and lifting and trying to raise capital a lot of the times and manage these deals and manage the investors. So that's where the technology really comes in. And we've created a platform that really automates most all of that and adds an efficiency there that really is unprecedented and allows us as professional real estate investors to focus on our main job, which is finding deals and finding investors.
What a great answer. I think it's appropriate to ask as a follow-up question to that, what's something that you used to believe about real estate when you first started that you no longer believe now?
I think it is similar to what a lot of people struggle with, and that's the fact that you have to know the people you're going to raise capital from, that you have to have a particular network of high net worth people to be able to take down larger deals. That's something that I believed and I think stunted my growth in the early days. I wouldn't go after some of the larger deals because I just thought, well, how am I going to raise that capital? Where am I going to, get that from? I can't qualify for it on my own. I need millions of dollars to do this. And I later learned that that's just not true.
Have you had a deal fall apart last minute?
Oh yeah, of course. Yeah, right at the closing table. I had if I just go to the large end of the scale, what's large for me is I had a 200 unit that I was buying in Tucson, Arizona, two separate apartment buildings, one package from the seller. I had a beautiful deal worked out. It was a $10 million deal. This is about 5 years ago, COVID time. 7 million in seller finance, 3 million down. I'd raised all the capital, went through all the effort to do that. And then literally 48 hours before I was to fly down and sign an escrow, the seller wanted to change the terms and we had to back out of the deal because of it. So that's just one example.
No kidding. That's insane. What changed for them if that's something you can talk about? Like what changes on a deal
Yeah.
that big, right? Where because ultimately a single family house, right? Like there's not that much that goes into it realistically compared to a $10 million project that you're negotiating, doing all that. It's a much longer process too, I'm assuming. So with that, like how does somebody just 48 hours before getting it done, how do they just change their mind all of a sudden?
Yeah, no, you're right. I mean, I hear all the time people say, "Oh, buying a single family is the same as buying a large apartment." That I don't believe that at
I
all. I mean,
totally
in
disagree.
principle, yeah, yeah. But what happened there was I had this awesome seller financing note lined up.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And I'll geek out on this part a little bit if that's okay.
For sure.
And what we had is she wanted me to personally guarantee it, which was fine. I don't normally actually do that, how I structure it, but I was willing to do it in this circumstance. And we had a substitution of collateral built in there and a first right of refusal and a whole bunch of great things in this note. But later, when she went through final review, she was not going to allow me to be able to resell the property in the future and keep the note in place. I didn't have a balloon on it. One thing about seller financing is the sellers can defer massive amounts of taxes, depreciation recaptures specifically. And so I had taught her that. So she was literally looking at, she had 1031 a bunch. She was looking at saving a couple million in taxes, actually, a huge amount. And so what she ultimately said is, well, I want this note. We'll substitute the collateral, meaning you can take the debt onto other properties, but it can't stay on this property. What that meant was if I wanted to sell the property in the future and do something like a wrap note and offer seller financing, I would not be able to do that. Um, Somebody would have to come in with new financing. And the other problem with that is there was, a payoff clause. So I wouldn't be able to allow that new financing to take out the debt. The debt would have to follow me and my portfolio for the next 30 years, no matter what. So she wanted me to be able to, and I normally love this clause, but in this circumstance, it was $7 million worth of debt. Well, that's a lot in my world and my portfolio. That was a lot of debt to go spread around to my other properties should I
Right.
desire to sell this particular building. And with the investors that I had involved, to your point, there's more working parts there. And the risk I felt was associated with being locked into that debt for such a long period of time with really no way to pass it off in a wrap note or cash it out with a cash buyer, that the risk was too much for us to be able to move forward on the deal. I didn't have the exit options that I would normally have, and that's what happened there.
Wow. That's so wild. I love these types of stories too. Not that it's a great story, I guess, for your intents and purposes, but um, it's
Well,
always incredible to listen to how human nature takes over sometimes.
yeah. Yeah, it turned out great though. In fact, it led to a wonderful storage facility, Class A storage facility that I still own today. I'd had to raise over $3 million to
Right.
do that deal. So it wasn't about a month later or so, I had this other opportunity of a Class A storage facility that the owner, who was a custom home builder, really great person and a great home builder, but was not a marketer, really didn't understand the real estate investment game. They were struggling with the project. And so he contacted me, and I was able to take most of those investors. I still had to probably round up another 1.3 million, but move that into the storage facility project, which in hindsight is much better than what these buildings in Arizona would have been, because they needed a lot of deferred maintenance. It was going to be very management heavy, and this Class A storage facility is like a dream compared to a C-class apartment building,
Right.
which I have a lot of those.
So what types of deals with what you're doing now, what types of deals are you avoiding now?
We really don't work in the single family home space unless it's a portfolio.
Hmm.
So I don't, for RE tokens, it's about servicing third party. We're not involved in principals or acquisition. I still do that. I still run my real estate investment company and will purchase real estate. But RE tokens, where about 90% of my focus is now, is about serving third party. It's about helping people raise capital, give them the tools to do that, give them the liquidity component to their real estate. And so normally you're probably going to be at a couple $1 million plus equity level for it to make sense to really get into the securities world of capital raising and do that. If you're, raising under $1 million, for example, you're probably no legal or tax advice given by me,
Sure.
but my experience and what I see is you're probably doing like a joint venture, with that level of capital where you're bringing in one or two or three partners to do something like that. When you need to raise, multi-millions of dollars, two, three, four, 100, whatever it is, then you probably are going to create a security to be able to do that. And that's normally what we do. So to answer your question directly on what we don't normally serve is somebody that would want to tokenize just one or two houses. We could do it, but it's often not really viable for all the time, effort that it takes to do that for them. For now, I think that'll change in the near future, but
Right, as you continue expanding, scaling, etc., just to be able to serve more people overall at some point. But at the
yeah,
same time, you got to stay in the vertical that you're in before it blows up, and then you move on. Right? It's kind of like Amazon. I like to give Amazon as the best example. They started as selling books, and now look what they sell. They sell everything. So, same exact
yeah,
deal.
yeah,
Let me ask you this: uh, with what you're doing, I had my question loaded up, I'm telling you, in my brain, and then I just lost my complete train of thought there. I don't even know how that happened. That never happens to me. But I'll get it back here in just a second. I think where I was going with it um, was like, what does the future look like in the next like 12 to 18 months for RE tokens with you guys?
yeah. So here in June 2025, so at the time we're recording this, just a couple days away. So we will be launching the first real estate exclusive SEC regulated marketplace for real estate security tokens or private placement real estate. And we'll be getting our digital broker dealer's license and ATS license. So that is really a big deal for us. And so what the future looks like is real estate and real ownership, fractions of real estate. You could call them shares or LLC membership units. You'll be able to buy, sell, and trade those just like people do with stocks today. And for real estate, that's a evolution that's long overdue. Most
Mhm.
asset classes, stocks, and more recently crypto, are able to trade and settle, in a very short time frame and electronically. But real estate doesn't have that. There's huge time frames, massive amounts of middlemen, if you will, which causes a lot of expense. You just can't access your equity. Well, that's going to change with this secondary marketplace. So you will see ownership in real estate, private placement, we'll call them fractions of real estate trading like stocks or crypto. Because when I think about real estate, comparatively, real estate's like a big gold brick, right? And if you have a big gold brick, uh, it's hard to, get a lot of people into that investment and certainly hard to get them out of that investment. And the gold brick just moves as one. You could sell the whole thing or bring debt against the whole thing, but everybody has to play ball, right? You're really depending on that. And that's why it's kind of illiquid, a really large gold brick. But imagine taking that gold brick and turning it into, 10,000 gold coins or 10 million gold coins. And now each investor holds their own gold coins and can go do what they want with it. That's what the future looks like. And it really allows for those folks that couldn't get into the gold brick, they can go buy a gold coin or two, though, and be able to have real estate ownership, participate in the cash flow, the equity upside, and even the K1 tax benefits.
Sure. Absolutely. My train of thought came back to the station. I remember the question that I was going to ask as fast as it flew out. One of the things that I recognize in you is obviously you've had a long track record of success, and I'm sure every cliche could go into it. You just got to take action, never, quit when it gets hard, like all of those things. But what do you think really separates you from somebody that got started at the same time as you did, that failed, gave up, and quit, versus you 25 years later of creating the success that you've been able to? What do you think your special, or what is your special sauce? What's your secret?
Yeah, so I think part of the cliche part is at least we're touching on that's your mindset and your commitment and your belief in it. There's no doubt about that. But if I was gonna distill some secret sauces, two of them that come to mind is one of them is I relentlessly educate myself. Absolutely
Mm,
relentlessly and get myself around the right people. I know you guys do a lot in that space and bring people together for coaching and mentoring, and that's absolutely critical. Not only do you get some of the technical and strategic maneuvers that you need, the network that you build, the people that you meet, and then the energy that's created with that. And if you do that year in and year out nonstop, and then you're putting it into practice, you become an expert in that space. So when it comes to like seller financing, for example, where I have millions and millions of dollars in seller financing, I educated myself to the point where I could teach sellers why it was a fantastic idea. In fact, I wrote a book on this, why it's a fantastic idea to sell on owner financing, because they can defer taxes, keep an income, it's safe for their money, all of those things. And that really gave me an edge. And same with, the capital raising. So I was able through just continuous, consistent, and relentless education to make myself very valuable in my knowledge base. So when I was dealing with clients or prospects, sellers, investors, etc., I had that knowledge base, that value, and I had some networks and some reference points that were superior to those folks that weren't putting in the same time and effort to developing themselves and their education in the space. Because you'll want to do that too. You want to select kind of a criteria or a space to dominate. I think, don't mean to take a full tangent here, but I think one mistake people make is they're like, oh, sure, I'll look at the deal, right? Is it an industrial building? Is it a single family house? Is it an office? Is it an apartment building? I'll look at it all. Well, you won't be very good at any of it. So I do suggest, narrowing that down to what your favorite flavor is right now, your asset type, etc., and mastering that and getting good at that, before you expand and dedicate your education surrounding that. So, in my hometown, I've had many people, investors come into town, get into the space, and they start asking around. And by the time they call me, they said, hey, I heard you're the apartment guy in Spokane to talk to, right? And so that's an example. So the education is one secret sauce. The other is I have always pursued private investors and capital with virtually the same effort as I had finding deals and deal acquisition. And I think that's another thing that set me apart is when sellers said yes, I could close every time. I had already had my investors, prepared. I had an investor program that I kept in touch with them with. And so I knew what my cost of capital was, which gave me a huge amount of confidence when I was negotiating the deal, what I could say yes or no to, and the strength to really walk away from a deal knowing that I had the investors on board with me to be able to close that. So those are the two secret sauces. One is the education and development constantly, consistently, relentlessly. And number two is putting a very similar effort into making sure you have enough money to close deals as you do in actually finding the deals themselves.
Great answer, man. There's so many nuggets in there. You wrote a book called Freedom Through Cash Flow. And what would you say the premise of that book is for somebody that wants to pick that up? Because you talk about being a relentless student of the game and of things. I would like to say that that I am myself. One of our family core values is improvement, and I'm constantly learning myself, constantly looking for ways to level up, even just my own knowledge base. But what would you say the premise of your book is, and who's that book perfect for in case somebody's listening and wants to go check that out based on some of the knowledge you've put together over the years?
Yeah, so I think if the listening audience is mostly real estate investors, then they should know I wrote that book for the purpose of teaching sellers how and why to sell their buildings or their portfolios to me. And so if I'm a real estate investor, I pick up that book and I reverse engineer it and say, okay, this is what this guy is talking to sellers about to be able to get some of this amazing seller financing. And it really dives into the benefits for the seller, like depreciation recapture and the ability to defer that, how to minimize their tax obligation, how to present yourself as a quality buyer, teaching the sellers, things to look out for. So that if you're competing against another buyer and you have some strengths maybe that they don't have, you'll be able to point those out much easier. So that would be it. If somebody's looking to buy properties and involve seller financing, which is perfect for the B and C class apartments that I was buying, and typically larger assets, it's more common. It really explains what those benefits to the seller are. The flip side of that is when I first got in and started doing seller financing deals, it was for me. It was like, okay, well, great. I don't have to use a bank. And there was a period of time where I couldn't finance an outhouse. So that was good that I didn't need to use a bank. And I thought, well, this is just a great acquisition strategy if I can talk people into it. But once I educated myself much further, lots of hours with CPAs and attorneys and things like that, I realized that it was a huge benefit for the seller to find a high quality buyer like me to be able to sell their building to. I've been walking through the patio of a restaurant and had a gal stand up. It was like, Tyler, big hug. It's the guy who pays our bills, right? Because she's getting this monthly income for decades and doesn't have the liability of owning all the real estate. I was able to just do a nice setup that worked for them so they could retire.
That's awesome. Man, I got another question for you, but we're so over time that that I don't know if I'll be able to ask it. So I guess with that, Tyler, where can people learn more about you or go to find out what you're working on?
Yeah, well, our website, retokens.com, there's a quick start guide to tokenization on there, and I highly recommend people go, that's a free download, so they could go check that out and really learn about real estate tokenization and what it can do for their project. These are going to be investors that want to scale. And I'm also on LinkedIn. RE Tokens has a page on LinkedIn, and I'm there. But our YouTube channel is where you're really going to get the cocktail party stories. You're really going to get all the expert insight on our YouTube channel, which is just at RE Tokens.
There you go, folks. Go drop them some love from the real estate pros and the Investor Fuel family. Thanks again for being here, Tyler, and sharing some of your insights with us. We appreciate it a ton. And we'll see y'all in the next episode.
Thanks, Stephen.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.